Maybe you can give a grade of 7 out of 10. Because if you look at the data, it's pretty good. 6.9, I think is above the expectation. But we have many hidden risks. For instance, we are still heavily relying on the real estate market, the credit-driven model, and also we see the asset bubble is growing bigger, and the debt problem continue to be a big risk for the Chinese economy. If we don't solve all these problems, I think the growth rate itself doesn't make too much sense. That's why I can only give a grade of 7. The challenge for China's financial sector is, on the one hand, we need to get more market-driven reform, more financial innovation. But on the other hand, the financial regulation is lagging behind the market innovation. So we have some financial risks, especially in the internet finance area. This worries the government leaders. So they realize they have to upgrade the financial regulation framework. That's why we set up the State Council Financial Stabilization and Development Commission. I think they are already trying to do something, especially with what we call the wealth management product. I think this is a very big milestone in the Chinese financial regulation. They try to put more financial products in the scope of financial regulation. But we also have some other challenge. For instance, over the past years, the Chinese financial sector is growing too quickly. And on the other hand, we see too much credit flowing into the asset bubble, especially the housing market. All these things happen because the China's M2 monetary supply is growing at a speed much higher than the GDP. So inevitably, this will cause the asset bubble. The most important thing is that the Chinese government need to make it very clear where China is heading for. Although we have the 19th Congress, we have the third plenum reform 4 years ago, but still many scholars and many business people still feel worried and feel confused about the future direction of China. Are we really moving toward a more market-driven system? We are not sure, because we see very complex signals like in the SOE reform area. So we need to make the signal more clear. Where is the direction for China? The second thing is we need to do some real reforms. Yes, we have a great plan, and we have been talking about the reforms again and again, day after day. But if you look at the past 4 years, the real progress is very little. For instance, if in the following years we can make the IPO registration-based reform, we can cut the tax, or we can make the SOE, the big banks, more market-driven. This will be very important signal to the market and to the investors. And also, I think the Chinese government need to try to get ready for paying the cost for reform. For instance, we have so many zombie companies. They borrow debt, but they cannot pay the debt. So the government agreed that, okay, we need to kill some zombie company, but there will be some cost. So there will be some unemployment, some bad loan, and also maybe negative influence on the GDP growth rate. Are you ready for that? I think that's very important for the Chinese government.